Hi everyone, welcome back to Corporate Decoder, the place where we look at corporate filings and try to figure out what's really going on. Today we're diving into the latest annual report from AquaBounty Technologies, a company known for its genetically engineered salmon. Let's see if their financials are as enhanced as their fish schmucks. Things aren't looking too good. They have a history of losses, they're scrambling for cash, and they just sold off a bunch of their farms. Is there any hope for this company, or will it be belly up like a dead fish? Let's find out. This is their report for the year ended December 31, 2024. AquaBounty Technologies Inc., that's the official name. Their commission file number is 001-36426 if you want to look them up in the SEC's website. The aggregate market value of shares held by non-affiliates was about $6 to $1 million. That's how much the public thinks the company is worth. They're pulling information from their proxy statement for the annual meeting, so you can find some executive and director information there. Now, let's get to the real meat of the filing, starting with a warning. This section is basically the company telling you, hey, don't sue us if we're wrong. It means everything they say about the future is just an estimate, and a lot of things could go wrong. They mention a bunch of things that could cause their actual results to be different than expected, including raising additional funds, disease outbreaks, or global economic problems. We will mention more of this later. They summarize all the important things that could sink their ship, including the fact that they're losing money and might not be able to continue operations. It also includes strategic acquisitions, investments, or mergers that could have an adverse impact on our business. If you're interested in digging deeper, they have all their reports available on their website. Here's the overview of what AquaBounty does. They've been trying to build these big recirculating aquaculture system farms, or RAS farms, to raise their genetically engineered Atlantic salmon. They started building a big one in Ohio, but they had to stop because costs kept going up. This also made it hard to get funding, so they had to start selling off assets. Next to be sold was their Canadian subsidiary, including their broodstock farms and the intellectual property for their GE Atlantic salmon. It sounds like they are really hurting for cash. Because they had to sell everything for less than it was worth on their books, they had to take a bunch of impairment charges, which is an accounting term for admitting an asset is worth less than previously thought. A little bit about the company's history. They started in 1991 researching antifreeze proteins, and in 1996 they got the licensing rights for a gene to make salmon grow faster. They were trying to be a leader in land-based aquaculture and using technology to improve seafood production. But they sold the intellectual property for their GE Atlantic salmon. They had a reverse stock split where they shrunk the number of shares to boost the price. Basically, every 20 shares became one share. That usually happens when a company's stock price is really low and they're trying to avoid getting kicked off the stock exchange. Some industry context, aquaculture or fish farming is a huge industry. According to the Food and Agriculture Organization, it was worth $96 billion in 2022. The current methods of farming salmon in ocean cages has some major problems like disease and pollution. That's where AquaBounty thinks their land-based farms can come in to solve those problems. They believe land-based systems are more secure from the environmental effects of raising fish at sea. It also allows them to be closer to consumers, reducing transportation costs. The US market for Atlantic salmon is huge, over $5.4 billion in 2022, but almost none of it is produced in the US. There are some big players in the salmon farming industry like Noe, Samar, and others. Consolidation has been evident in the past few years. Now, about that Ohio farm they were building. They started construction in 2022 and spent about $145 million before they stopped due to rising costs. About 30% of the facility was done when they stopped. Estimating costs for these kinds of farms is really hard. Their estimate to finish the Ohio farm, including construction, equipment, and other costs, was in the range of $485 million, $5 million. That was too high, so they had to look for other options. They're working with their investment bank to find someone to invest in or partner with them to finish the farm. They think it'll take about $400 million to complete, but that depends on the final design and what they plan to use the farm for. They only have 4 employees in corporate roles. This section is super important. They tell you everything that could go wrong and why you might lose your money if you invest. Get ready, it's a long list. They may not be able to raise enough money to stay afloat. If they lose key vendors or can't find new ones, they might not be able to finish the Ohio farm. They need permits to build and run their farms, and any delays or denials could halt everything. If they finance the Ohio farm with municipal bonds, they might have to agree to restrictions that limit what they can do with the farm. Any acquisitions, investments, or mergers involve risks, including difficulties integrating the purchased operations, technologies, or products. Salmon farming is risky because disease outbreaks can happen, which can kill a lot of fish and cost a lot of money. They could be hacked, which could compromise their data and disrupt their operations. Global health events like COVID-19 could mess up their business and increase their costs. Problems in the financial industry like bank failures could make it harder for them to get funding. They might not be able to use all their past losses to reduce future taxes. They might not be able to keep their stock listed on the Nasdaq Stock Exchange, which would make it harder for investors to trade their stock. Their corporate documents have some things that could make it harder for someone to take over the company, even if it's a good offer for shareholders. They don't plan to pay any dividends, so investors won't get any cash back unless the stock price goes up. They have their headquarters in Massachusetts and they own a parcel of land in Ohio where they stopped construction. They are being sued by a construction company for not paying for work done on the Ohio farm. The company Gilbane is claiming they are owed about $1.5 million and the company are still assessing. Their stock trades on the Nasdaq under the symbol QB. Here's where they really dig into the numbers and explain what's been happening financially. It's worth reading carefully. Just a reminder, the company sold its Indiana farm, its Canadian farms, and even the intellectual property for their salmon. The goal to survive. Again, because they had to sell assets for less than their value, they had to record $129.8 million in impairment charges in 2024. They admit they have significant debt and depend on additional funding to continue as a going concern. They had about $230,000 in cash on their books at the end of last year, and with asset sales in March, that's climbed to $57,000 now. Sales and marketing expenses were down 71%. Research and development expenses were down 60%. General and administrative expenses decreased 27%. The big one, they recorded a $101.9 million impairment charge. The company net loss significantly increased from 27 tons and $5 million to $29.1 million in 2024. That's a 441% increase in the money they are losing. The company states that this increase is a result of the above numbers and impairments. They are really dependent on their ability to find cash, and there's no guarantee that will happen. They need more cash and are trying to sell assets and get financing. If they can't, they might not be able to continue operations and stockholders could lose their investment. Their auditor basically says that their financial problems raise substantial doubt about their ability to keep going. They're required to evaluate their internal controls over financial reporting. Management thinks their controls are effective. The company has an insider trading policy governing how people can buy and sell stock in the company that is reasonable to comply with. Here's a list of all the exhibits and financial statements included in the report. Again, their auditor points out those net losses and says there's substantial doubt about their ability to continue as a going concern. They really want you to notice this. The auditor highlights the impairment of long-lived assets as a key audit matter because it involved a lot of estimates and assumptions. Estimating the fair value of the Ohio farm was tricky, and the auditor had to use a lot of judgment. Let's look at some key numbers in their balance sheet. Cash went down from $8.2 million to $230,000. That's not good. Property, plant, and equipment, the value of their physical stuff after accounting for depreciation and wear and tear, also plummeted from $14.4 million to $22 million. Stockholders' equity, which is the book value of the company, also decreased from $165 million. Time for their profit and loss statement. Sales and marketing expenses went down quite a bit. General and administrative expenses went down too. Loss from continuing operations skyrocketed to $130 million compared to $13.8 million in the previous year. And net loss for the year went from $27 million to $149 million. A look into how they are spending. Cash used in operating activities is a negative $13.8 million. Investing activities was positive $7.5 million due to sale of their Indiana farm. These notes give more details about the numbers. Here they explain what AquaBounty does, which again is trying to be a leader in land-based aquaculture and the use of technology for improving its productivity and sustainability. They acknowledge the big problem: they need more cash to survive. This explains how they do their accounting. It can get pretty technical, but it's important for understanding how they make their numbers. A quick note that they have to make their own judgments and predictions about assets and amblyopsies. they had to get experts to value their assets. They have a lot of equipment. If long-lived assets value is impaired, then they have to write that down. In 2024, the company did not operate, nor did they source or use materials from any jurisdiction that prevented them from inspecting. We design and assess our program based on the National Institute of Standards and Technology, Cybersecurity Framework, NIST CSF. Lawsuit from company they contracted for the Ohio farm saying they are owed 1.5 millimeter. The company uses Deloitte as their auditor. As of the end of 2023, company had $8,203, $8,069 cash versus only $230.24. And during the second quarter of 2024, we began to market our Indiana farm for sale. To improve the price level of our common stock so that we could regain compliance with the minimum bid price requirement on October 12, 2023, our stockholders approved a reverse stock split of our common stock. So what's the story here? AquaBounty is in deep trouble. They're selling off assets, losing money, and struggling to find funding. They're trying to position themselves well for land-based production, but have sold off all their production assets. Oxyphene, the only remaining large asset, is the farm in Ohio. Based on their report, the company is actively exploring strategic alternatives to sell the asset to raise capital. Because their strategic move has been to continue construction of the Ohio farm, it presents a critical audit matter. There is an issue that the company isn't bringing expertise outside of the CFO to access and manage these critical cybersecurity risks. We do not anticipate paying cash dividends in the foreseeable future, and accordingly, stockholders must rely on stock appreciation for any return on their investment. It's hard to give a positive view with these financials and risks. I wouldn't recommend putting any money into this company for now, as it appears to be too risky. And that said, if they are able to bring in new investors into Ohio Farm, I could see them being competitive in the space. That's it for this episode of Corporate Decoder. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.